Let me talk to you about how to file your Form 1065 this year. Do not go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you doing today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. And if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today I want to talk to you about how to file Form 1065. So this is a tutorial and I'm going to really break it down for you. And whether it is tax season or not, you need to file your Form 65 if you are a partnership, if you are an LLC in some cases. So as a small business owner, you are responsible for organizing, filing, and paying your taxes, right? So if you own a partnership or LLC, limited liability company, you must complete an IRS Form 1065. Now, this is also known as the U.S. Return of Partnership. And this is where you will report your business finances to the IRS. Number one, let me give you an overview of Form 1065. Now, we actually have it on the screen right now. You can see it on the screen. Essentially, Form 1065 is an informational form that you'll use to report everything from income deductions, losses, gains, income, credits from your operation. As the owner of a partnership or LLC, you got to submit this form to the IRS every single year. And it's usually around March 15th or April 15th. You don't have to use this form to calculate or pay taxes on your income. And here is why. A partnership, in the eyes of the IRS, is a pass-through entity that reports its financial information so that partners can enter their share of that income on their personal tax returns. So as a pass-through entity, you fill out Form 2553, so you only have to pay taxes on your partnership's income at your own individual income tax rates. Therefore, you and the members of your LLC will be required to complete a Schedule K1. It's called Schedule K1, and to report your share of profits and losses. And you file this this Schedule K1 with your personal tax return. And now let's talk about the partnership tax returns due date. As I was telling you earlier, the due date is March 15th. So March 15th, and if March 15th falls on a weekend or holiday, the return is due the next business day. And you may file your partnership return electronically, but partnerships with more than 1,000 partners are required to file Form 1065, Schedules K1, and other related forms and schedules electronically. The IRS is just trying to streamline their operation. And if you really think about it, right, electronic filing, it has so many advantages, including the reduction of errors, the no tax return is being lost in the mail, and it's just so fast. So that's pretty cool. And the reasons for filing Form 1065, you will not owe any taxes on an IRS Form 1065. But by filing the Form 1065, the IRS can verify that you and your partners have paid their taxes correctly. So this is an essential part, if you think about it, of being a small business owner, and this must be completed. The thing here is that the IRS is trying to reconcile the taxes that the income information that you are sending about the company. They're trying to reconcile that to the income information that the partners of the LLC or the partnership are reporting to the IRS. Next, I want to talk to you about the taxpayers who can file Form 1065. If you are a domestic partnership, if you are an LLC, if you are a 501(d), or you are a foreign partnership, you have to file a Form 1065. Now, let me break it down. According to the IRS, a domestic partnership is a relationship between two or more persons who join to carry on a business with each person contributing property, money, or skill. And if your LLC has been classified as a partnership and you have not filed a Form 2553 to be treated as a corporation, you are on the hook for an IRS Form 1065. You likely have a 501d. I was talking earlier about 501d. You have a 501d if your nonprofit is religious or apostolic. And if your business is foreign, but you earn more than $20,000 in annual gross income from U.S. sources, you must still fill out a 1065 form. So I'm just kind of showing you right now on the screen. You have here, we have a nice recap of who files what, partnerships versus partners. For federal taxes, you can see on the screen, pays taxes. So the partnership does not pay income tax. It's just an information return. The partners pay income tax on their share of the partnership, and whether it is on the Schedule 1 or when it comes to a self-employment tax scheme. Let me give you some important rules on partnership income taxes. And in 2017, we had a law called the TCJA. So that's the Tax Cut and Jobs Act. This has had multiple changes that may affect your partnership income tax return this year. And some of the major changes that could affect your partnerships are allowing more small businesses to use the cash accounting method instead of accrual accounting, increased write-offs for depreciating business assets like equipment and vehicles, the elimination of tax loss carrybacks, but net operating losses can still be carried forward to future years. And we also have a fourth element here, a fourth change here. We've seen the elimination of entertainment expense deductions. So meal expense deductions are still available, most at 50%, but some meal expenses may not be allowed. So what about the qualified business income deduction? That's very important too when you're thinking about Form 1065, whether you are a partnership or you are an LLC. You have to understand one thing. A qualified business income deduction allows partners to take a deduction for up to 20% of their portion of business income, in addition to other normal business deductions. So this is kind of new deduction that has many limits and qualifications. So what you want to do is you want to either check with your tax professional to see if you qualify. If you use electronic software like TurboTax, Tax Act, or H&R Block, the software is automatically updated. So everything, they have the latest info. And note that the partnership does not get the deduction though. It passes through to the partners based on their share of their individual Schedule 1. I was talking about the QBI, the Qualified Business Income Deduction. And let me give you some information and documents needed for a partnership tax return. So you need to file your partnership income taxes. You gotta provide some financial reports and other documents to your tax preparer. And I'm talking here about the balance sheet for the beginning of the partnership's fiscal year and the end of that year, a profit and loss statement for the end of the year, and some information to calculate the cost of goods sold. And what about, let me just kind of talk to you a little bit also about some instructions, IRS Form 1065 instructions. So if you're wondering how to file a Form 1065, you are not alone. But the IRS has made the form very easy in the last few years, and I'm going to really break it down for you here. So the first thing you need to do is you need to collect relevant documents. Okay, so I'm talking here very, very important financial and tax document. Some of this may include a profit and loss. I already said that. Balance sheet, deductible expenses. You need to gather tax forms such as your W-2s, your W-3s, your FUTA tax return, your Form 114, Form 720, Form 940, and Form 941. Those may be necessary as well. So the thing here is that the nature of your business will dictate the particular documents that you need. Again, you can actually check this out with your tax accountant, your enroll agent, or your CPA, or if you are doing this yourself, you can the software that you're using will actually prompt you to gather those documents. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Studio Kiwi Show. How are you doing today? I hope you are doing fantastic. I'm doing marvelous if you're here to ask me. And if you are doing as great as I am, go grab a cup of coffee or tea or vodka. And let's just continue here. Okay. And I want to talk to you now about this next step. So after you gathered your relevant documents, you want to fill in boxes A through J. So once you have all the documents, now from A through J, as you can see here, we are showing you on the screen again the Form 1065. So you have a principal business activity, principal products or service, and business code number. You have your EIN, the date your business was created, your total assets as shown by the books, the type of tax returns, the accounting method, and the amount of Schedule K ones that you are attaching. And so the next step, you have to complete the remainder of page 1 on 1065. So you'll find that these boxes are separated into 3 categories. So you have the income category, the deduction, and tax and payments. So to fill them out appropriately, you'll need to use the financial and tax documents that you gathered. Next, you want to fill out Schedule B. So that's on the second page of 1065. So you'll notice that that the goal of Schedule B is to provide details on the technicalities of your business. So you'll answer the questions on this page with yes or no, and these questions will ask for detailed information on things like ownership percentages, partnership debts, partnership investments, and foreign partners. And Schedule B will continue on to page 3, and you have to complete Schedule K. Now let's talk about Schedule K, because Schedule K will be on page 4 of Form 1065. Now this is basically a summary that reveals each partner's share of the partnership's income, credit, and deduction. Please note though, folks, that Schedule K is not the same thing as Schedule K1. A lot of people make that confusion. No, those are distinct forms. I will talk about Schedule K1 later on, but Schedule K is totally different. So Schedule K, as you can see here on the screen right now, Schedule K is a partner's distributive shared items. And again, we're talking here about income, deduction, credits, and self-employment. And this is a quintessential form for the IRS. Again, as I said earlier, for the IRS to reconcile the income that the company as a whole, the partnership as a whole, the LLC as a whole is reporting to the authorities versus what the individual partners are reporting to the authorities. Next step, you want to fill out the remaining section. So on Form 1065, you have the Schedule K1. So the purpose of Schedule K1 is to reveal each partner's separate share. So while your partnership or LLC will only require one Form 1065, each member of your entity must complete their own Schedule K1. So by doing so, they'll be able to file with the IRS Form 1065 and their personal 1040 tax returns. So you'll be able to find most of the information you'll need to fill out Schedule K1 from the income and expenses section of IRS Form 1065. Besides, in addition to business income or losses, Schedule K1 will ask you to report any fringe benefits, capital gains, bond interest, real estate income, dividends, or other guaranteed payments you may have earned. So we're showing you right now on the screen, as you can see, Schedule K1 and all the different sections of Schedule K1. And then let's move on to Schedule L. And Schedule L is what you will use to show that your balance sheets match your books and records. So you will fill out numbers of 1 to 22, and you have to record your assets, liabilities, and capital. So if there are discrepancies between your balance sheet and books and records, you'll need to clearly explain them. And Schedule L will help the IRS understand the financial state of your partnership. Now, folks, and I want to emphasize here, it is important to know that if the answer to all 4 questions in Part 6 of Schedule B on Form 1065 is yes, you will not be required to fill out Schedule L. And I'm showing you on the next screen here, you have Schedule L. So you have the assets, the liability. So Schedule L really is the balance sheet, okay? And Schedule M. Schedule M, again, we're showing this to you on the screen. Schedule M will allow you to explain any differences you may have between your bookkeeping income and tax return income. So guaranteed payments, tax-exempt interest, and depreciation may all lead to these changes. Keep in mind though, folks, that you'll have to file Schedule M1 even if there are no differences between your book income and reported income. So So you can see on the screen here we have Schedule K1, M1 rather, and also have a Schedule M2, right? So the last section you may fill out on Form 1065 is Schedule M2, and this is where you will inform the IRS of any changes to you or your partner's capital accounts, aka equity, right? Make sure this amount here equal the total amounts you reported on item L of every partner's Schedule K1. Now, let me just say that you wouldn't have to fill out a Schedule M2 if you answered yes to all 4 questions in Part 6 of Schedule B. I'll be right back right after this. Don't go anywhere, folks. Welcome back to another section of the Awesome Security Kiwi Show. We are still talking here about, I'm giving you a Form 1065 tutorial here, explaining things to you how this form should be filled. Now you have to review and file with the IRS. So once you have completed the entire 1065 form, please take the time to carefully review it. So when you confirm that it's good to go, you can submit it online or by mail by the deadline. Make sure to attach any required forms like 1040, Schedule F, Form 8825, Form 1125A, and Form 8941. Now, what is the filing deadline for Form 1065? I already said that you must file Form 1065 on the 15th day of the 3rd month after the date of the tax year ended. So, in the event the due date falls on a Saturday, Sunday, or holiday, you will have to file by the next day that isn't a Saturday, Sunday, or holiday. So this is important. So if you need to file, say, your IRS Form 1065 for the 2020 tax year, your deadline will be March 15, 2021. Now remember though that it is in your best interest to start the process as early as you can, because that way you have plenty of time to complete the form before the deadline. Because if you don't file Form 1065 on time, you'll face a penalty, and the penalty is $210 for each month or part of a month for a maximum of 12 months. The failure to file, for each month or part of a month, the failure to file the form continues. And you got to multiply that by the total number of persons who were partners in the partnership income during any part of the partnership's tax year for which the return is for. It's very important. So you can avoid this penalty if you file for a 6-month extension and you turn in your form by September 15, 2021. So you can file an extension. So let's talk about filing an extension. So you have to use the Form 7004, and you have to file this form by March 15th. And if you have taxes to pay, you have to pay that at that date. And what about filing an amended partnership tax return? So to file an amended partnership return, you want to make a copy of the partnership return Form 1065, and you check the box G5 on page 1. And you just need to attach a statement with details on what has been changed. And if the Schedule K1 partner or LLC member statement is incorrect, check the amended K1 box on the top of the Schedule K1 to indicate that it has been amended. What about estimated taxes for partners in partnership? This is an important topic. Okay, so the partnership, as I said earlier, the partnership pays no income tax. So as an entity, it pays no income tax. Okay. So it doesn't pay estimated tax, right? So the idea of estimated tax does not apply here. So partners may have to pay estimated taxes if they expect to owe more than $1,000 in taxes when their personal return is filed. So quarterly estimated tax due dates are April 15th, June 15th, September 15th, and January 15th of the following year. So you may pay estimated taxes by check with a voucher or by direct pay. And we also want to talk about state partnership taxes. So partners must pay income taxes on their distribution of profit in a partnership in the states or states where the partnership is located. Partnership taxes are paid on the individual partner's personal state tax return. And one thing I also want to say before closing here is that don't forget self-employment taxes, because general partners in a partnership are not considered employees, but they are self-employed. So your income as a partner may be subject to self-employment taxes. I'm talking here about Social Security and Medicare taxes based on your partnership type. And general partners usually pay self-employment tax on their earnings, with some exceptions, but a limited partner's share of partnership income is not subject to self-employment taxes. Now here there are exceptions too, but I'm not going to go into details here. So if you must pay self-employment tax, you must prepare and file a Schedule SE to report your partnership income and also calculate the self-employment tax amount. And this tax amount is added to your personal tax return. What about husband-wife relationships as qualified joint ventures? This is an important topic that a lot of people want to have clarity about. So if you and your spouse are the sole owners of a partnership, and in this case not an LLC though, you may be able to elect qualified joint venture status and file 2 Schedule C forms instead of filing the partnership tax form. You don't need to file an election to do this, but you must meet certain specific qualifications. So both members must materially participate there. There must be no other owners, and you must file a joint tax return. By materially here, when you hear the word materially, this is just a way to say that you have to be significantly involved in the venture. All right, so folks, this is it. So there's no denying that filing out a Form 1065 is a time-consuming and very tedious endeavor. Fortunately, there are resources at your disposal to make it easier, right? So it's always a good idea to invest in accounting software and tax software that can help you organize your information. In addition, and this is one thing I strongly encourage you to do, it might be worthwhile to hire a tax professional who can guide you through every aspect of this complex process. Thank you so much for listening to this conversation, and I want to quickly give you an overview of today's tutorial. So I give you an overview of Form 1065. I gave you an idea of the tax return due dates, the reason for filing Form 1065, the taxpayers, the kind of taxpayers who can file Form 1065, and important rules on partnership income taxes, qualified business income deduction, information and documents needed for partnership tax return, IRS Form 1065 instructions, filing deadline, filing an extension, filing an amended partnership tax return, estimated taxes for partners in partnerships, state partnership taxes, and self-employment taxes, and husband-wife partnerships as qualified joint ventures. Thank you so much for listening to today's conversation. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.